Good day, YouTube. This is Jay Money with Falling Forward Financial. Just a article I come across here, better buy Aurora or Canopy Growth. I've talked about both of these numerous times around the channel. Probably my biggest holding is Canopy Growth. I'm kind of screwed in the red on Aurora in regards to their reverse merger. Whenever that was, I'll link that in the comments. I think my cost basis on them is like 50 something. Yes, $50 and whatever. So still kind of pissed off at them. But two of investors' all-time favorite MJ companies released quarterly results last week. Canada-based Aurora, ACB, and Canopy Growth, CGC, have made investors rich in the past. Both had an early mover advantage in the Canadian medical MJ market. However, the last couple of years have been a roller coaster ride. Besides some of their own mistakes, external headwinds like regulatory challenges in Canada delayed an opening of legal stores, which slowed down growth for these MJ specialists. So again, both companies have been attempting to rebound through various cost-cutting strategies, but they don't appear to be working out so well. Aurora and Canopy repeatedly missed achieving earnings before interest, tax, depreciation, and amortization, or EBITDA, targets last year. Let's take a look at their recent quarterly results and determine which of these MJ stocks is a better buy in 2022. If I didn't have any shares of Aurora, I would say they both are. I would definitely go with Canopy. But since I own them both, and since I'm totally screwed in the red on Aurora, and yes, I do need to buy some more to lower my cost basis, I already know that, but I would go with Canopy at this point in time. But here's kind of a chart going over both. Here you can see in the dark purple is the Aurora. So kind of up and down. Canopy is in orange, so they kind of mimic one another at times. And here's the S&P level percentage of change, so just kind of nice and even, staircasing up a little bit. But Aurora quarterly results failed to impress yet again. Despite all the cost-cutting strategies, Aurora has failed to achieve its EBITDA target numerous times since last year. Its recent second quarter fiscal 2022 results weren't a sight for sore eyes either. Total net revenue declined 10% year over year to 60 million Canadian dollars, while medical MJ revenue saw an 18% increase year ago period. Consumer MJ revenue plunged 48% to 14 million from a year ago period. The slump was a result of Aurora's lack of development in recreational MJ products. However, management said it was introducing a new range of products set to launch this spring, so we'll see if that happens. And it should be interesting if these new products can help revive Aurora's revenue. So that will be the question in regards to Aurora. Canopy also saw a decline in revenue yet again in the third quarter, ended on December 31st, 2021. According to management, a slump in the Canadian MJ sales caused an 8% drop in net revenue of 141 million for the period, and that's in Canadian. Canopy saw a 19% increase in consumer products revenue of 58 million Canadian, most of which stemmed from its acquired business like Stores and Bickle. This Works, BioSteel, and other U.S. CBD businesses. It is sad to see, despite having an early mover advantage, the company saw Canadian medical MJ revenue fall 21% year over year to 61 million. Canopy also was the first to launch a variety of high-margin derivatives after Canada legalized them. Still, its recreational MJ revenue fell 25% from the year-ago period. So, As a result, Canopy recorded an adjusted EBITDA loss of 67 million Canadian. Despite the losses, the company ended the quarter with cash and short-term investments of 1.4 billion with a B as in boy, thanks to backing from Constellation Brands. And that's just what I was thinking earlier. CGC Canopy is my go-to on this one, just in regards to Constellation Brands. They're not going to let CGC fail. They're getting into, if you don't know what Constellation Brands is, they're the ones that make all the Mexican beers, Corona being my favorite, Modelo, and several others. Corona's always my go-to, so. But again, what is the better choice? Both Aurora and Canopy are eager to enter the United States market. It is understandable why these companies are eyeing United States market, as it is much bigger and better opportunity than Canada. And just a shout out to Canada, as they have starting to acquire quite a few Canadian listeners, followers, subscribers, all the above. So, and again, I want to thank you for everybody who has subscribed, but just a shout out to Canada. So, even without federal legalization, two domestic growers are close to generating $1 billion in revenue for 2021, just from limited state markets. However, I believe until both companies achieve profitability from the Canadian market, it will be challenging to expand into the United States. While Canopy made no forecast of when it will hit positive EBITDA, Aurora again assured investors doing so by the first half of 2023, which is still kind of a ways off, but as I've said before, I believe 2022 is going to be a turnaround for some of these. We'll just have to wait and see. Wall Street analysts have hopes for both Canopy and Aurora shares this year. They see upsides of 39% and 43% respectively for the next 12 months. And again, I believe Canopy is the better marijuana stock to buy now. So while Aurora's future looks bleak, prospects look better for Canopy in the United States a few years down the line. It has a portfolio of innovative products and some strong partners to establish a footprint in the United States market. But that could take a while. Investors who have patience and stomach to hear the risk can buy and hold Canopy for the long haul. So right there you have it. So as I've pointed out numerous times, a lot of the MJ stocks that I have, I'm keeping for 2 to 5 years, probably more like 10, as you're going to get your biggest, if you want to say, bang for your buck. So that's what she said. But in regards to these, I would definitely go with Canopy Growth. But still in the red on this one. I'll go ahead and link both of those links in the description so you can watch those videos. I've talked about MJ a lot here on the channel, quite a few other MJ stocks as well as ETFs. If you like to diversify, I would watch my ETFs videos. And if you're looking for a rate related to MJ, you can check out IIPR. And there was another one that I just did recently. Ticker is right here, AFC Gamma. I'll go ahead and list that in the comments as well. So, and you can watch that one as well. So that is another REIT that gives a, as you see right there, 8.52% dividend yield, and much cheaper than IIPR. So. But that is all that I have on this. Better buy Aurora or Canopy. You can list your comment, which you'd rather go with. And I'm going with Canopy. But again, I don't give tax, legal, or trading advice. And I want to thank you for watching. And if you haven't smashed that like button yet, go ahead and hit that for me, as well as subscribing and hit the bell so you're notified of when the next videos drop. Again, thank you for watching, and shout out to my Canadian followers, and happy trading, happy investing, stay green. Cheers.